Hey everyone, Sam here. Everyone here okay? And you should be able to see the screen. We're looking at TradeStation. Igor, you just sent me an email, right? With those trades, those 3 trades. Is that you? I think I just saw it come through. Great. I opened it for a second. Looks like you were. I looked at it literally for a minute. I'll look at it again later on. But it looked like you were 2 for 3 so far. In testing, so nice job there. And I saw your winners were bigger than your loser, which is good. So just certainly keep shooting those over. Those are great. I'll take a look again in a little bit. Anyway, let's get started. So today we're simply just going to be running through markets, applying our strategy of identifying turning points and market moves in advance, and doing that. To do that, we have to figure out where banks and institutions are buying and selling. We also have to make sure we know who we're buying from and selling to. We've talked about this the last couple times, so let's spend a lot of today applying that. I want to start with this one. So you're looking at the supply and demand grid here. So we had a bunch of levels that met entry this morning on the grid. Copper actually was a big one so far. We'll maybe look at that one a little bit. The Aussie dollar just met entry. Notice this 89.72 to 89.85. That's from this morning's supply demand grid. So we just came into that zone here. We haven't fallen out of it too hard yet. We've fallen from it looks like it's only up about 10 pips. Okay. Boyke, good question on economic data and news. We don't treat that any different than any other time in the market. We want our levels in the market. Typically, what the data releases and news are going to do is just, especially if it's a significant release, if it's something that's unexpected, something like that, it causes prices to move. It's just going to speed up what was going to happen anyway. Remember, yeah, I've heard that question many times, but that's okay. No problem there. So I guess the best way to say it is, if you want to sell at retail prices like this Aussie dollar level, something needs to, people need to be convinced that those retail prices up here that we were selling at are worth buying at, right? The only way you're going to sell at supply is people have to buy at supply. The only way you're going to buy at demand is people have to sell at demand. So that's what the news really does. It helps us do that. It certainly helps banks and institutions do that, right? Okay. So make sure you've got your levels down, and when you do, you're going to find that your big news events are going to be your favorite days to trade if you're short-term trading, right? Or long-term trading. Look at if you're in our XLTs in 2009, March 2009, that was the low of the markets, right? The stock markets, they've rallied a ton since then. We were all over those in the XLTs, if you remember. But the only way to get prices down there is that you needed a lot of people to think that market was worth selling down there. So you had that really, really bad news. Anyway, I think you get the point. So let's move on here. Now today, we'll certainly look at the FX markets, but we can certainly talk about any market you want. I know we usually stick to FX. Yeah, we can look at the pound. You were looking at a 30-minute chart. Was that a buy or a sell? Were you looking at there? Which one was that? That was a sell. So up at this level here, or this one from a couple days ago. I think let's see. Yeah, there were a lot of there were quite a few levels that got hit, especially on the grid today. There's a lot of activity already. Tons yesterday, tons today. So yeah, you had a number of opportunities here. Obviously, prices went up to supply. They came down to demand. But again, we can start with any market you want. One of the markets that I thought would be, well, again, I'm here for you. So, I can look at any, is there a specific market? Yeah, dollar, sure. No problem. Let's get there. Just take a quick peek at this Nasdaq. Okay. Let me bring it down to this thing's just sitting in a little level. It's nothing great. Yeah, let's go to dollar Canada. I saw someone wanted that. Let's take a look. We'll see if we can find some short-term stuff too. You know, another interesting question would be, you know, does news drive price or does price drive news? You know, we can explore that next time. So yeah, looking at dollar CAD, right? If we blow up the larger time frame, we want to assess where we're at on the larger time frame supply demand curve first. Okay. So there's that. Obviously, pretty high in the curve. As we come down to the smaller time frame, you know, I was looking at this market yesterday. Not a whole lot to look at here in the bigger time frames. Really, the only thing that if we're going to focus on anything, this market has been, this supply level is what the market has been trading off of. Okay, so that supply level, the market's been trading off that. We've been barely touching that level and falling, suggesting this market can doesn't look like it's going to have a hard time getting below 110, but obviously we're not there yet. Okay, so knowing where you're at on the larger time frame curve, you know, now you can come down to smaller time frames and look to plan something out. So with supply above, again, I wouldn't do anything with this market now. If you get up to above 111, you're getting close to that supply. If you get down close to 110, you know, you're getting closer to the demand. But that just means on a small time frame, you can take whatever shows up. So, for example, okay, looking at just a little 10-minute chart here. We've got a couple areas right here and another one right up here. And I'll take these down to a 5-minute in just a moment. Boyke, yeah, we talk about the curve quite a bit. And I don't know there's a solid short answer. But we'll go over it again. No, not the trend at all. No. Mm-hmm. Okay. So just coming down to a 5-minute chart, taking a little snapshot of this. Right. Well, you know, just to get your mind going in the right direction. At every price point, right, on this market, we're looking at price points on the right. So if you look at the price points on the right, every single pip, there's a certain amount of willing demand and a certain amount of willing supply, right? All we're trying to do is assess that, because that and that alone, nothing else impacts where price is going to turn and where it's going to go. So it's the supply-demand equation really at every price point. Okay. So we want to know, you know, on the larger time frames, where are the price levels where, you know, your supply-demand imbalances are greatest, and that quantifies the curve. But we'll go over that more another time. Not a problem. So this level right here, actually, now that we're looking at the 5-minute, we see it actually fell from there. So when you get down to opposite of the curve here, right? Now you go down to the very small time frame. When you're, when you're drawing your line, drawing your levels, All right, like Igor, you look like you did a pretty good job at the levels you sent. So Igor's starting to take some live trades, trading the strategy. He sent in 3 trades this morning. 2 of them were pretty nice winners, and one was one was a loser. I think the winners were quite a bit bigger than the loser, and his lines were pretty good. There's some adjustments we'll need to make there. So I saw a couple of things we can do there, and he got me thinking about this. You want to find, where exactly is the origin of that move? Where exactly did prices fall from or rally from to create that zone? That's where the imbalance is. At the end of the day, that's what we're looking for, is the imbalance. Yeah, so good point there, John. So that's why I kind of moved this. But as we look at it, so yeah, supply exceeded demand here, exceeds demand here. That's why prices fell from this level. But as John is pointing out, and he's right, notice how price, and let me move the box over. Maybe that's why it will be easier to see. So notice you already had a rally back up into it. Well, here's actually where we're going to enter. And the fact that price went all the way up to the top of this range means that this probably is not a great level anymore. Okay, so according to our odds enhancers, that would disqualify that level. Remember, we're only looking for fresh levels, and it's not. However, this one above is. Looks like this is far from current price, but remember, we're only looking at a 5-minute chart. So price can easily get there. Okay. Shane, whenever, especially in FX, it doesn't matter. In the other markets, we've got that 2-3 hour window in the morning, but yeah, in the futures, yeah, so if you're trading those equity index futures, we'll go to those in a few minutes. You're going to find it's very clear that in that 7 to 9 o'clock window Central Time, 8 to 10 Eastern Time, levels that are created during that time or meet entry during that time are very high probability, and that's because that's when institutions obviously are making the bulk of their revenue too, okay, both on the trading side and transaction side. Okay, so let's see. All right, so we'll just go 2 pips above that level, right there. And so we're looking at right. So we're looking about 8 ticks there. 8 pips. Okay, so we'd be looking for about 16 on the downside, which would bring us down to, at least to the first target, right? That brings us down to about right here. Okay. So if you're looking for 2 to 1 off this, that's where 2 to 1 would come in. Notice the chart is already offering us more than that. Shane, anytime. It's one lesson I've learned over the years is time is irrelevant when it comes to the entry. In the larger time frame, some of the best entries have come just after hours when no one's around and price never comes back. Yeah, you absolutely want to look for supply above the range, Cam. Those are going to be your best levels. Mm-hmm. All right, so watch that one. I don't want to get too hung up on the little 5-minute Canada level. Okay. But yeah, levels beyond the range are going to be great, but because we're in the middle of the curve for dollar Canada, the blue line's a target, by the way, red line stop. We can be buyers and sellers. That's the point. Let's look at a different market. Okay, it looks like see what this NQ is doing. I actually shorted this, by the way. Full disclosure there, just so you know. Yeah, we can look at the dollar next. So this thing's not really doing a whole lot. I have actually been watching it on a 2-minute chart. Okay. And you'll see the level here if I go back. There's a level. Notice when it was created, Okay. So kind of right in that sweet spot there. Drop, facing, drops. So that's the level we just came into for the first time. This level above, yeah, Jason, I'm glad you asked that because we would not call that a level. Here prices go down, they go up, base, and drop. So this is probably a pullback to something over here if we look on a very small time frame. That odds enhancer, the flip, that's probably what that one is. If you look on a smaller time frame, you'll see the flip activity in there. And that's pretty key. Yeah, Boyke, I would say absolutely. So if you're looking for depends on what risk reward you're looking for. You know, if you're really looking for 3-to-1 opportunities, if you want to take 3-to-1 opportunities, look for opportunities on the chart that offer you 4-to-1. Make sure the chart is offering you more than you're going to take. So the NQ, not a whole lot to look at here. However, below current price, we do have a level down here. And according to our odds enhancers, we would pick this one, according to our rules. Okay, so there we go. So 34.82 to 79.50. So if that's where we're saying demand is, then target for a short from up there would be, let me make this a blue line. So we put it just above that pivot right there. Right there is probably fine. Okay, so that would be a target, small time frame target. $34.62 to 60. Down here, you got to be careful because you have a couple levels on top of each other. But anyway, so that would be a target for that short. And then obviously we can look to potentially be a buyer here as long as there's no opposing level that forms on the way down to that. So that would be the Nasdaq. It's a pretty clear set of levels. Yeah, let's go to the dollar for a minute. I know a few people asked about the dollar. That's a market we absolutely need to look at every day. And we have had a development here. So remember, we've been all over this 81.50, and it's such a great, strong level that prices, can barely even get there every time they come back to that. It's been rock solid, and I'd look for prices to. My guess is that you're going to go a little bit higher into this level, maybe trade up into the mid 50s, before you move lower. But we'll see. The one thing that might change that is what's happened very recently. If you look at where prices are now, and we go down to a smaller time frame. Let's do that. So let's go to something that might be too small. Let's just go to a quick 4-hour chart here. So now we're going to see that there's, we've got some supply above now. So it's probably going to be, looks like it's going to be tough to get to 81.50 because we have all this stuff right here. Okay, and we'll put this is kind of where prices fell from. Well, it is where prices fell from. We'll put our other line up here. So anywhere up in here, you're likely to see prices, continue to decline down into the low 80s. Yeah, I don't think the supply level is getting, it's getting a little weaker because we've been up there, but we haven't even, we keep saying 81.50. We haven't even touched 81.50. We get close to 81.50 and collapse. We've been looking at this level for a while. So not a whole lot else to say about the dollar. There's really not a lot of demand. that close? Yeah, FX, I don't think you want to take a level if it's had a pullback of, 25% or more. Okay. Is there another market people want to look at? I have a whole list here next to me. I can go through. Sure, the 10-year, no problem. Let's take a look. And my hope is that during this session you pick up some nuances. So I'm trying to go overboard on the talking and explanation side. So that if you're wondering why I'm doing that, that's why. Yeah, here's the 10-year. Now, the 10-year has some really, really good supply here. I actually send out a kind of a monthly bond report. So I'm very familiar with the 10-year and the 30-year charts. On my report, we've had that level, and then of course there's another even stronger level sitting just above. The thing with the bonds, with the 10-year and the 30-year is you don't really have a lot of demand that close. Okay, so that's what the 10-year looks like. So this is where, if you're not familiar with the 10-year, this is where interest rates come from, this market. Okay, and obviously inversely related to price. So when price is ticking up, interest rates are ticking down, and vice versa. So when you hit supply and you're about to fall like this, what's about to happen to interest rates? Right? They're about to go up. Remember, the strategy we're employing here does a lot of things outside of just where's the next turning point and let's take that trade. For example, does anybody trade options here? Anybody trade options? And if not, that's okay. Then not a lot of options traders. Okay. Okay, so probably half actually. Now that I look, well, and I won't go down this path too far. Don't worry. But think of options, right? What's one of the most important components to trading options? What do you have to watch? What's one of the most important things to watch constantly? It's such a big factor in people's decisions. Yeah, it's volatility, right? Volatility. And so how do people measure volatility? How did the entire options world and every options book ever written measure volatility? By looking at volatility in the past, right? And the VIX or there's a lot, different ways, but it's all coming up with that implied volatility, that any kind of volatility. It's all looking at past data and to tell you whether volatility is high or low, whether you should be buying or selling options, correct? But let me ask you this. If I gave you the choice and said, look, you have to pick one, you can't have two, you can either look at volatility in the past, which is how you do it today, or you can look at volatility in the future. Which would you pick? Yeah, of course, we're going to pick the future, right? The past doesn't mean anything. So you think, well, yeah, great, but how do you do that? Well, think about it. If your supply and demand levels, say on the S&P chart, if your fresh supply and demand levels are in the S&P are close to each other, right? What's about to happen to volatility? Well, it's about to be low, right? If your fresh supply and demand levels are far apart from each other, what's about to happen to volatility? And we had this the last week and a half. Yeah, it's about to increase. You see what I'm saying? So it's a completely different way of looking at volatility from how, everybody looks at volatility, but it's the right way. Make sense? All right. So same thing with the levels here. Yeah, maybe you never have any intention of trading the 10-year note futures, but if interest rates impact your life at all, this chart you're looking at here is a very important chart, and it's not a good one if you don't want interest rates going up. Now, when you look at the 30-year, you're going to see that we do have some demand below, actually, right? We don't really see this in the 10-year. When you put the whole puzzle together, it really does make quite a bit of sense, but okay. So we do have this level below, just to show you, if you're watching these markets, the 10 and 30, we do have a nice level below. Price almost got there, shot up. So, I would say over the next few weeks, you're very likely to stay between, 126 in the 30 year, and then that supply level in the 10. Yeah, let's go back there for a moment. Now, when we go to the 180, we've got a couple supply levels stacked on top of each other here, but we also have some demand levels here. So the 10-year is likely to be, if you're just trading, if you're just trading this market, I see some of you are. Looks like great trading right around the corner. When you come into either of these levels, you're probably going to, the profit zones are not big here, but remember, we're looking at a very big time frame chart. If we came down to smaller time frames, you're going to take the real bottom part of that, because that's where price has rallied from. And then you're going to take the top portion of this one. Okay. Now, I know that doesn't look like much, but you're talking 125.27 to 125.13. Yeah, it's not that much. Anyway, that's what the chart is offering you now. So your price is probably going to be contained within these two areas for the next few days, next couple days maybe. But it's a little trading range. If you can do anything, you're going to lean on the short side just because of where you're at on the weekly here, and because that 30-year demand is lower. Boyke, it depends. It depends what type of trading you're talking about. So if you're looking at really short-term trading, I'd say it's impossible not to find a number of trades. But if you're not doing real short-term trading, what type of trading are you doing? Are you looking for really small time frame stuff? Are you looking to be really active in the morning? Or are you looking for so maybe 3 to 4 quality trades a week, 2 to 4 quality trades a week, and for those real high probability setups. One of the people that works for Online Trading Academy, his daughter's been getting involved in this. She graduated college, and I've been working with her, and she's been kind of working with the team, and she took all the classes and everything, and she's doing real well. So she has taken, and the reason why you made me think of her, she hasn't taken many trades. She's taken 7 trades so far, and she's 5 for 7, but she's very low trade count, very high quality opportunities. Yeah. Okay. And we'll talk more about that on another session. That's a great topic to talk about. Let's look at another market. Yen. Yeah, let's take a look at yen. Oh, euro yen. Yeah, we'll look at euro yen. Let's look at euro yen. I know a bunch of people asked for that. Sorry about that. Okay, there's the hourly. Let's go up one time frame here. Okay, so the yen, larger time frame looks like we've turned. We're now headed up, but caution. And I'm not saying these are great supply levels to sell short against, but let's kind of put these levels in here. We are coming up to these areas of supply. where it's unlikely the price is just going to cruise through these levels. You're actually hitting a supply level before you get to these. All right, there's the euro yen. So now we come down to small time frames, knowing that you have supply up there. You know, if there's any buying opportunities, I don't know that we're going to find much here. Yeah, you know, I'd wait for the yen to get a little bit higher. I'd focus more on shorting it. Look, we're already down to small time frames, and we don't see a lot of quality demand on that rally. That just tells you price can fall pretty quick through, you know, some of these areas. You do have some really small time frame demand zones here, but nothing that great. Back to our NQ and see how that's doing. And it's not doing a whole lot of anything. I'm just sitting there. Okay. Came down to this. We'll come back in a little bit. I see the questions you're asking. Those are pretty basic questions. I know you've probably been, of all people in the group, you've probably been with us the longest. You know, you can always go back and watch those recordings too. Yeah, copper? Sure. I'd love to look at copper. Yeah, okay, I think you've probably been with us at the beginning, right? Probably been at least 4 or 5 years. Good stuff. Yeah, we're looking at copper. Let me just go to the grid here real quick. I know we have some good levels on copper. 3203, 3195. Let's put these in. So to show you where I'll try to show you where these levels came from. So I think we had, let's put that one in, then we'll find the new one. So 32. So this is our level from this morning. That's the 3203. And then we put our bottom line below this one. That's because we combined two levels. Right here. So we're looking at, I'm sorry, let me go to 5 minutes. Okay, so you really had two levels on top of each other here. And you had that, and then you had this. So our two lines here really encompass, we just combined those two levels. Right? We made it like that area. So these were our levels for the group this morning. Whoops. That's this one right here. That trade worked out pretty well. And I don't know if we got up to the other one. 32, we did. Let's see. 40. We just snuck through that one a teeny bit. Let's see. Drew, any platform is fine, as long as the data is, accurate and real, solid. Data's gotten much better over the years. You go to a larger time frame here, and you'll see what we're looking at to the right. Just going to put a horizontal line in here. I'm sure we'll find another trade in copper. Always something to do in copper. Okay. So prices came into, these two levels here, and then this area right here. Obviously, it's falling. The next trade in copper. Yeah, side of trading FX. I see your question there. Does this strategy help with the mental side of trading? No, I'd say it's probably hurt. This strategy is probably the worst for your mental side. Just being honest with you, not to beat up the strategy, but if any strategy is going to give you a hard time on the mental side, it's probably going to be this one. Well, let me explain that for a second. So, people have I don't believe there's any big psychology issue when it comes to trading. The issue is that most people are taught to do this wrong, and most people just naturally trade backwards. Right? The average person doesn't get excited to buy when prices are down, and they don't get excited to sell when prices are up. Remember that kind of at the core of trading education is, Dow theory, right? There's all these books written on trends, make sure there's a strong uptrend before you buy, make sure there's a strong downtrend before you sell. That goes against how you make money buying and selling anything. No one's ever made money doing that. You know what I mean? Yeah, and in fact, I know a lot of you are using this strategy. Would you agree that your best entries are your toughest to take? I think you'll find that too, mentally. Let's go to, what is this NQ going to do? It's going to make up its mind. Let's see here. We'll just fall to demand already. So here's that level, and if you didn't see it before, just so you can kind of learn something from it. You're not going to be able to see it there. Let me go down to a 5-minute chart. There's that level. Okay. Again, the key thing here is the time that it was created. That's another odds enhancer. Whoops, I didn't mean to do that. So there's 7. We always talked about that 3-hour window. If you go to the 3-hour window, there it is, 7 to 10. These are Central Time. Central Time Zone here. Okay, and there you go. So yeah, at the open of trading in markets, that's when prices are typically at levels where supply and demand is most out of balance. Right? Yeah, that upper level, Rafa, is okay. Not the one just above it, but the other. Oh, yeah, not this one. Not that one. Okay. Let's see. Let me go to the real quick for that. Yeah, no, we still wouldn't take that. Again, even if it looked like that, make sure you go down to a smaller time frame before you do anything with that, and you'll understand why you're not going to take it. This is probably going to, prices falling now. So if you're in this, the risk reward here is not that great, at least the initial one. So again, what we're focusing on here is more, where prices are turning, where they're likely to go. So nothing fantastic here. We're on a very small time frame. What's nice in the equity index markets now is, remember we were saying last time that the Nasdaq is very likely to go down to 3,400. I think it actually almost got there. Not there yet, though. There's really no demand on any larger time frame until you'll see here. Yeah, it's this one. This is the one we've been looking at. Let me show you 180. Okay. We've been going over this for a couple of weeks now. The fresh demand is not until 3,400. So we expect prices to come down there. Not only is that likely to be somewhat of a turning point, but remember, these levels are magnets. We haven't even had that discussion yet. So, all right, actually a little bit lower. Okay. And the trade that we've been, discussing at Online Trading Academy and my Friday morning trade station events is this move from. We're expecting a move from here down to 3,400. Didn't quite get to 34, but we'll see. There's time there. Fresh supply, fresh demand. We just want to trade from one level to the next. That's the lowest risk, highest reward, and highest probability time to get into those. Let's go to that. While that's coming, I'll get these charts back in order. Yeah, Peter, we'll get more specific, another time, but just, some people looking for, larger time. We always want to start with the larger time frame no matter what we're doing. Now, looking at Euro from this rally and from the drop. So let's go down a couple time frames. Let's start with this one. We've already gone into this. So you did have one pullback into this level, but that just means all the sell orders sitting above this area are going to be fresh. Let's see if you hit that yet. Did we? Not yet. So it looks like a new high into this level is probably shortable. See that? So yeah, we did have a pullback that touched this level. That just means all the sell orders that are sitting at 136.17 and higher have not been filled yet. They're still sitting there. Okay, so watch for that one. Yeah, the levels are going to appear a little bit different on the different time frames. That's why we look around. And the whole purpose of going from time frame to time frame is the exact same reason why I adopted multiple X-rays. We're still looking at the same market and same level. We just want to make sure that we're really doing a good job of quantifying, the orders. How many orders are left? How much supply or demand is really left? How much has been used up? What's the level of imbalance? All those things. Okay. I know we're kind of past my time limit here. So hopefully this was helpful. I'll put my email address in here again. Here's Seiden@tradingacademy.com if you have any questions. I'm really looking forward to our next session together. I think that's one you won't want to miss. We're going to go over some really good stuff there, and finally got that class together for you, so we'll talk about that next time too. We'll be able to go into all the deep stuff over a multiple hour period of time. And anyway, have a great day, everybody. Have a great weekend, and we'll see you next time. Thanks.